I did a few calculations on the metal prices in oil, figuring in that the US dollar index would have remained the same because not everything is going on the same as when we're looking at the price of gold going down in dollars and other currencies. It's probably going up a little bit. And just looking at the US dollar index, if we factored in that the US dollar index did not go up 0.7% today, the price of gold would have actually increased by 0.3% instead of going down by 0.4%. Price of silver would not have went down over 3%. It would have went down 2.45%. Case of platinum, palladium, both they wouldn't experience as great decreases, and in case of oil, it would have been slightly down at 0.5% versus, instead of being down $1.14, in actuality, if we kept the dollar index at the same, it would have been down 0.46 cents. Not much of a movement. Not much of a movement. Now, in the last 3 weeks, the dollar index has actually increased over 5%. But just taking, and that's from November 1st now, November 1st to November 23rd. Now, if we took this 5% and just added it on to the prices of gold, silver, and platinum, and palladium today, you can see the situation is not as bad because the global currency system is, every other country is pricing these metals in their currencies, and you're not seeing as nearly as much movement. And when you're actually just do the quick arithmetic, you can see that prices are not as depressed as some people are thinking. Silver actually, and it screws up all the charts. It does screw up all the charts because if you're looking at silver and gold, and you're saying it's down this much, well, it's not down that much in other currencies. And the price of silver right now, if you factored in the 5% movement of the index of the dollar, that's this area down here. Silver would be 33 1/3, gold would be 1777, platinum 1621, and palladium 613. So it's the movement in the dollar index that is actually causing this, a lot of the depreciation in the metal prices. I want to look at that dollar index chart real quick, and this is a long-term chart. This is a weekly chart, goes all the way back to 2008. But the reason I put this on here because the last time the euro went to like 120 to the dollar, the dollar index actually rose to 88, and that was during that time in early 2010 where supposedly, I heard that some hedge funds got together to attack the euro somehow or whatever it was. But I think it's one thing that's quite obvious to me is not everybody on the top is on the same plan, and not everybody on the top is thinking the same. So there's people that want the euro to hold together in the United States, and I've read that article by the Council on Foreign Relations in their publication Foreign Affairs, urging Germany to take a leadership role, right or wrong. It seems that there's probably a hell of a lot of impetus in the United States to have the euro survive. But I don't think in the short term, I don't think the dollar is going to get as strong as 88, but I think it's going to keep rallying from here. So maybe it could go to 81. I don't know. Maybe not quite that high. But you got to put things in perspective. The metals prices are not looking the same as far as the currency, the euro, what's going on in the euro and other currencies in the world, especially the euro. So what you're going to see is a lot more buying, even into the ETFs or whatever. And if they're pouring money into these ETFs, the ETFs more than likely are buying the metals. I know there's like a lot of suspicion, and it's probably very true. The ETFs don't hold all the metals they supposedly should be holding. But still, they're going to be buying more metals as people pour more money into it. And there's so much money out there that it's impossible for them to go into something like silver or palladium. Forget about it. They couldn't do it. They'd have to, it's impossible. So do expect these prices to go up even if there's a problem in Europe on the metals. It can't, in their currency, these metals are probably going up. And I did not factor that in. But looking at where they would sit just having the same dollar index as we had just on November 1st. The metals are staying very, very steady in prices for the last 3 weeks. They haven't really changed much at all. There's something else I want to mention about the brokerage firms. People are so scared of these things. Well, in a lot of cases, you know, like this place I trust, Persian, going through this clearinghouse. It's there's not going to be any problems if your broker's using this Persian. There's not going to be any kind of problem with this at all. This is a very, very old company. It's a very old bank too. And I know you're saying, some people are saying, Wall Street's the worst people in the world, but these people, you're not going to lose your money in here. You're not going to lose your money. This bank, I know, even though I'm saying it's established in June 9th, 1784, it's like, I think it's the oldest bank in the United States. And, but the thing is, with this bank, it is extremely well managed, and they have very, very good troubled asset ratio. They have, like, the national average, like the higher the ratio is, the worse it is. The national median average is 14.3. Now, when a bank gets up to about 90 or 100, that's usually when it goes under, in many cases. So the national average is 14.3 on a troubled asset ratio. Bank of New York Mellon, they used to be the Bank of New York and and Mellon Bank. They merged. So the Bank of New York Mellon is only 2.9. They're far better than even the national average. This bank is in great shape, and their troubled assets have been going down over the last year, and they were still in really good shape, far better than the national average at the end of 2010. Now, as far as the failed bank list, it was a lot worse in 2010 than it is in 2011. 2011, the situation improved greatly, and I just ran the numbers. There was 157 banks that failed in 2010. It cost the FDIC $22.2 billion. Okay, $22.2 billion. And 2011 so far, there's 90 banks as compared to 157 in 2010, and it's cost the FDIC $7.1 billion versus $22 billion. So it's less than a third the money it's cost FDIC. And that's what you really got to look at, what it's costing them. The banks that have been failing are a lot smaller banks in this year than it was last year. So it does look a lot better this year overall. I think there's a lot of fear tactics out there too. And I know when they had that problem with the MF Global and John Corzine, it's not going to be everywhere across the nation that there's going to be these problems with your broker and everything on a piece of paper can't be trusted. I don't buy into that. They're going to have to use electronic markets. They're going to have to use something other than physical movement of gold and silver or something, even if you're on a gold standard, to do trades or whatever you have to do. So I know what Lindsey Williams said, but I don't buy into everything he says. I think he might be right about the oil, because what he said, following the political events, it seems to be coming true right to a T. Even though the schedule seems to be a little slower than what he said, I think he's right on the money with that. But as far as him saying that everything on a piece of paper is going to be worthless paper, I have a lot of doubts about that. But still, I am a firm believer in having physical metals, because physical metals are extremely important. But I just wanted to point out that, if we factor in that the dollar index moved 5% just in 3 weeks, the price of gold, silver, and platinum and palladium will be looking more like these figures: 1777 for gold, 33 1/3 for silver, platinum 1621, and palladium 613. So in the case of European money, These metals are looking more and more attractive, so I would expect them to be buying a lot of them, including physical metals. So there could be a big upward turn in price, maybe even right at the beginning of the year. And I think silver and gold are each going to still continue to float up to. I think in the case of silver, it's going to float up to that $40 mark again. But like I said before, what you're going to really see explosive move in these prices is QE, another round of QE. So then expect that to come up sometime not too far off, I would think.